Lynn, we're very excited to be supporting more and more US managers with their fund administration needs, both onshore and globally. But this is all happening in a pretty difficult and volatile geopolitical and economic environment. So what are we hearing from US managers and what kind of challenges are they navigating?
Yeah, quite right. It's been a very challenging environment. And I think we've seen that for the last 12 to 18 months. And I think with the new administration, it just exacerbates the issue, right? So, from a fundraising standpoint, I think it's still difficult. LPs are over allocated into the alternative space. So, you're still seeing the denominator effect taking place. And then you also have to think about we've got slow exits coming out. So that gives tighter liquidity. And then pension funds are looking for that. And so we're seeing a bump up in the secondaries. So it's all this trickle down effect for them. And then what does that really mean? It means that new funds are stilted. They're not coming out as quickly, they're not being raised as fast, and the dollar values of them are lower. So, how do we really help those managers kind of navigate that environment and figure out how to do that? And what we're seeing is probably coming into more LPs in different jurisdictions. So we're seeing the uptick in APAC and Europe, right? So US investors are looking more globally to find the funds that they need. And that means from a fund administrator standpoint, we've got the due diligence, the whole process, the varying AMLs based on regional needs, and then a complexity inside of structures that a lot of managers are not used to. And they're building this in order to get the growth they want. So having a partner that understands that, I think, is really where we're going to get a lot of bang for our buck in the fund administration world, and what Ocorian really brings to the table, both locally for the US and then all the other jurisdictions as well.
And as managers are going out to a more and more diverse range of investors to find that capital, they're also seeing an increasingly diverse range of requirements, due diligence needs, due diligence approaches, and a lot of emphasis being placed on both compliance and operational
Right.
complexity and how that's handled, which is where a partner, a strong and robust partner in outsourced operations comes in.
Right. And then from an LP standpoint, it's the same thing, right? So as you see emerging, go to lower middle market to middle market, LPs want a heavier hand in the due diligence. They want a heavier hand in who those partners are with those managers as they grow. So the way that they look for that kind of expertise is a game changer in the returns and allows those fund managers, as we all know, to focus on the investment piece, but then have that expertise inside the house as their extension of that partnership. And that brings a huge amount of benefit to the table. And it gives LPs comfort when they're getting their information, their financial information, all the way through the process and through the life cycle of inception to end of life. And I think that's really the power for the LP.
And speaking of looking globally to raise capital, we support a whole number of US managers raising capital in Europe.
Yep.
And some of the trends that we're seeing is that about 80% of all the managers we've surveyed and work with look to Europe to raise capital in the future, and to the Middle East, increasingly so.
Yes, yes.
Some of the challenges they see, though, are very similar to what you're describing, in that with an additional overlay of regulatory complexity and the cost of market entry, a US manager cannot actively market into the EU and to EU investors without having the appropriate arrangements, either through the placement regime, private placement regimes, or through having a third-party AFM solution, which is something that we support a lot of clients with. So this is, despite the increasingly politicized kind of geopolitics, there's still a very global outlook that managers and investors have to be competitive.
Right. That's accurate. And even though Europe has a heavier regulatory environment than the US, we see the SEC coming in and out of that environment and making interesting decisions. The marketing rule a few years ago increased those performance metrics to give better transparency. But then we just saw in March where they've stepped back from gross performance metrics to help ease that burden. So I think it's very much the play of the US looking at Europe and trying to understand where the regulatory balance is, and then how we can maintain both. But that's where a global firm helps you, to understand those nuances in each of these jurisdictions and how they play off each other.
And at the same time, this is looking at AML rules in January.
Yes. The U.S. is going to have a little bit of a tough time coming into that. We've probably had the softest AML, jurisdictionally speaking, and so this uptick that will start in January will be more meaningful and will move us into more of a global compliant. And what more managers already have European or APAC investments, they'll already be used to this type of AML.
Sure. And then operationally, I think it will create more and more workflows that previously weren't there before in terms of collecting AML KYC docs, looking through those requirements, which is where some of our solutions like digital investor onboarding workflows will come in to support managers and acclimatize to that environment faster.
Yeah, and it's critical to hold all that information, to know when it's expiring, how to replace it. It is a workflow in and of itself and has to be managed. And those are just one of the things that these portals make it so much easier to do that and have those at the touch points for you. So digital onboarding is now just a non-negotiable, and it has to, we have to bring that to our managers.
So it's interesting you say about the US having a lighter regime, and it certainly comes through in our findings when we work with managers. I would say over 80% of them say that navigating European requirements is extremely difficult, right? And they expect it to be more difficult as time goes on, particularly as maybe some of the regulatory regimes and environment diverge with a push for deregulation. So having a partner, as you say, who really understands, like Ocorian, with a long track record in delivering regulated solutions in the EU and in those jurisdictions is really important, because that can help you reduce the cost of entry into that market. Instead of setting up your own AFM to be able to market your fund effectively, our teams deliver very efficient, both cost and operationally efficient, pre-marketing and marketing solutions to allow you to effectively test the water with European investors without a full commitment of operational or teams on the ground. And we see clients go from a successful pre-marketing arrangement with us to a full fund setup within a couple of months, because there is still a lot of appetite for successful strategies from US managers.
It's still an amazing time frame, right, to do that with inside the European environment. And then also being able to bring that kind of information to managers who maybe have not been in this jurisdiction before, because it is a shock to the system for many U.S. managers what it takes to be able to do that. And in a smaller, what feels like a smaller global community now, I think being able to harvest those investors or those investments in other regions is going to be more of the norm. We see more and more managers going to Europe, especially U.S., for investors and investments.
And this trend is also expanding to the Middle East.
100%.
So I think Middle East has always been the source of capital, but it's also increasingly becoming a domicile for either feeder or parallel funds for investors. And more managers are putting teams on the ground operationally. And the regulators are really encouraging that too, with a very friendly regime. So in both the DIFC and ADGM, we're seeing a whole uptake in the number of managers that are registering. And that's something that we as Ocorian can help managers do through our regulatory and compliance solutions on the ground in Dubai as well.
Yeah, I think the regulatory environment there is very interesting. Those countries are coming together to try to see how they can really make the entry to investment there just less of a burden. And I think that will be more of the model that what we'll see. But I'm excited to see what we're doing in the Middle East, right? I think that it's well more popular than it was just 5 years ago. So it's a good place for us to be. And I'm glad to see Ocorian on the ground there already.
Very good, Lynn. Thank you for sharing your insights and expertise. And it's great to have you on the team.
Thank you.